What's going on, everybody? It's your boy C-Zar, and we are talking about MicroStrategy today, or strategy actually, as it's known now. Hit that like button, you guys. Subscribe if you want to see more content like this, and let's get into it. All right, here we are on a daily basis, gaining volume as we're moving down. It's very possible that we see some lower prices, but I don't think we'll go too much lower. The brunt of this drop has occurred already, and from a low to a high, being down here, it's actually very common to see some relatively volatile moves, and actually that's what we're seeing here, right? Bouncing off the 786. Oftentimes, when you do tear through to your golden ratio like this on the first attempt, you do bounce from your 786 and go all the way to your 236. So the fact that you found a little support in the 382 area there tells me that you very well could continue to go a little bit lower, and that makes a lot of sense because Bitcoin, I think, also will go a little bit lower as well. MicroStrategy is to hold support around 242. If I had to be honest, if I gave you my expectation, we went just above 250 there, which is a little bit outside my expectation. I was thinking that we'd go just below 250 there, but that's fine. Even the door is open to go around 208 and $196, something in that area, around 200 there, but I don't know if we're going to see that. I don't know if that's the expectation at this point in time. I do think Bitcoin will drop a little bit more, right? If it drops down to the areas that I'm thinking, maybe we have a little bit less than 10% to go. How much would that reflect in MicroStrategy? Probably not lower lows. But again, if we do, I can't see Bitcoin dropping less than 10%, and then MicroStrategy drops about 20% or more. That doesn't make sense to me, but it could happen. If you do, 200 will likely hold, but I am anticipating something around 240, maybe even a precise double bottom, slightly lower low, a fake out low, at the most a 15% drop from here at about like 225. So 268 now, with the prospect, with the possibility that this could be the low, with, I would say, an even greater possibility that I suppose the likelihood does lean to the downside that we do go a little bit lower, but that's okay, you guys. I doubt we go, at this point in time, I would say I doubt we go below 240, but if we do, it's still fine. Now, this is really exciting times, you guys, because this might be the very first sustained higher low that we will find in this overall downtrend that we've been in since November of 2024. Shifting the gears around, right? We're going from lower lows and lower highs, shifting the gears here from lower lows and lower highs to higher highs and higher lows, right? Starting a new trend. And that's what we need if we want to break out to this miraculous area, the promised land of $1,000 and beyond. And I do think that we're going to get there. From a high to a low here, the expectation is to bust through this golden ratio. And when you do that, the only suitable target area after breaking through the golden ratio there, sorry, I didn't mean to draw that, would be the 1886 to 200 level. Technically, you can go higher, but the first area here is about here, and that's at $1,155 to $1,200, almost $1,300. So something in that zone is what I would expect if and when we go higher. Now, what do we need to show on the charts down here besides just the simple higher low, higher high formation, right? What do we need to see on a fib perspective? Well, if we're looking here, the golden ratio is right at about $417 right there. I think a close above that would be nice. Don't get discouraged if this next higher high is not at the golden ratio. That's fine. You can figure yourself out. It doesn't have to be the first one, but and oftentimes, to be completely fair, from an overall low or high to a low here, we haven't even interacted with the golden ratio yet on this retracement. The first attempt often is resistance, so don't get discouraged if you don't close above. Oh, I'm sorry, I said 417. I meant to say technically it's actually at 392. 392. Don't get discouraged if we find resistance there, and it's very important that you don't just close there one day, but for like 2 days in a row or more and get some continuation there. It's okay if you close above this and then come back below this. As long as we're showing some productiveness, we're getting these higher highs and higher lows. That's really all that matters. But once we do indefinitely close above 392, I believe that's when we can start celebrating this is a valid low area. To be completely fair, I think that this is a valid low area already. We're going to back test this 0.5 and then rip all the way up to 392, $400 and beyond. It's time to start celebrating here that this is the low. It's time to celebrate, even if you're in a bear in denial, you can't be anymore. That's why it's time to start celebrating. And then once we break above about $493, this 886 here, once we break above that, that's when it's time to really start celebrating, because we're going to see these target areas of above $1,000 in a very short amount of time. Now, I do expect this to happen sometime by the end of May to the end of June, somewhere in that kind of time frame there, probably in June. And we'll probably, I would think it started moving up here sometime by the end of this week. Yes, let's see. Yes, sometime by the end of this week, because on Thursday we have CPI data coming out and PPI data coming out, marking just the overall health of the economy based on inflation, or just it's really just inflation data. That's all that it is, right? And that is a kind of mark of health in the economy and the state of things, and that will determine if we do see lower interest rates from the Federal Reserve in May. If it's a good CPI report, and I think that it will be, we'll likely have anticipation going into that event, and it will likely take us higher. Once we have the positive news, that'll be enough to conclude that the FOMC meeting is going to be bullish as well. And then once the FOMC meeting does drop the Federal Reserve interest rates, once Powell says that at the FOMC meeting, then we likely will see the markets continue to pump, not just into May, but through May, through June. That's the expectation. We've been held under for a very long time. I heard somebody say at one time like this, that the market is like a beach ball underwater, right? Somebody's just holding it down, they're pushing it down, and then once they let it go, it's going to lift up. It's going to come up so fast that it literally jumps out of the water. And that's where that breakout's going to be, guys. Something between about $1,100 and $1,300 by the end of May, by the end of June. That's all I got for you. In case it's not clear, we got a little bit to go to the downside first. 268 now, 245, 240 later, and then from there we go higher. It's completely possible I'm wrong and that this is the low. It's completely possible, so don't count on that, but just be patient if it does happen. And that is the call technically. I'm not saying I'm not calling for that. I am calling for us to go lower, but just don't count on it. Don't hold your breath over it, because this very well could be the low as well, and I wouldn't get my feelings hurt. Nobody should get their feelings hurt if it just decides to go higher from here. So that's all I got for you. Hit the like button, subscribe. Thank you all for being here. I'll see you on the next one, and take care of yourselves. Bye.